This week on Sylvia's Traders Lounge.
So what happened is that here in Kenya, we thought that real estate was going to grow. So I invested in Home Africa and lost 50,000. I bought at 6 and sold at 4. So I've learned it is a very raw lesson. So someone can sing real estate, this real estate, that to me. But I have the facts here. So I'll always be careful. So I think it's good to learn and understand sectors first.
Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn trade and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Our guest today is Robert Ochieng from Nairobi, Kenya, and he will be talking to us about how to screen for investments that suit your trading style. Robert Ochieng is the CEO and co-founder of Abojani Investment. He has helped over 5,000 Africans get started in investing. Ochieng is renowned for his ability to break down and demystify money investments in a way that is relevant for all. He has also been featured on the Forbes Africa, Radio Citizen, Metropole TV, as well as Saturday Magazine by Nation Media Group. He has over 10 years working in the investment space. In the financial sector, he has his company, Abojani Investment, is authorized by ICIFA to carry out financial and investment advisory services in Kenya. Welcome aboard, Robert. It's nice to have you on our trading lounge.
Welcome, Robert.
Thank you very much. Thank you.
And so you're welcome. From your trading bio, given your 10 years of trading experience, just tell us, and that is dealing with local as well as offshore stocks. Please tell us why people should actually invest in profitable companies.
Yeah, so thank you very much for that. So usually for Abojani, we look at personal finance from 3 pillars. So of course, the first one is the mindset, whereby you make that decision that you want to help yourself, you want to grow your income and wealth, right? So that's a very important thing, and it is a meeting that you have with yourself. No one else can awaken that fire inside you. You have to make that decision. That's the mindset, and you're gonna look at your life and what you want to do at what time, which basically is more setting personal goals, right? So after that, the second pillar is the skill set. So I believe that's why we're all here. And the skill set, we are students of life. So no one is perfect. You gotta learn with people, and it's very key that you be in the right communities. Because now we are in the scope community, as Sylvia's community is also there, Abojani. So when you are in the right community, you'll find each other. So Sylvia found me because she's in the right communities, and I'm able to connect with her because I'm in the right community. So with that, it also helps you because the race is won by teams. So people who are like-minded, they work together, and you'll not be able to make all the mistakes in the market, so that you can learn from your own mistakes. So you'll always be able to learn from others. So the skill set angle, I could say that it is very, very important. Once you've decided that you want to invest, if you don't have the skill set, you'll be like someone who is donating away money. So you'll always be complaining, things are not working out for you. But if you get the right skill set, then it will give you the courage to be able to handle the uncertainties and the challenges that might come up in the financial markets. Because again, we are dealing with risk, and we usually say that investment is risk management first. So you protect the downside so that you can live to fight another day if things don't go your way. So that's very, very important to always play defensive first, and you learn, take advantage, learn as much as possible. So when you look at the financial markets, there are so many investment instruments and options. And remember that not all investment instruments and options were created for you. So people forget that it is not the investment options that are supposed to come to you. It is for us to learn the skill set. Then now we go to the investment options. So when I'm looking at currency trading, when I'm looking at shares, it's because I have a need, I have my personal goals that I want to achieve. I'm hoping that, let's say by year 40 or 50, I should be able to live on passive income, or I should be able be able to have developed a trading pattern that can give me some good displaceable income. So because of that, we go to that instrument that is able to walk the journey of life. So it makes it very easy and exciting, because again, if you don't have that connection, then you might even not know what you are doing, because the market has so many things. You normally see these symbols. There's USD, Euro, we have listed companies, Amazon, Apple. So how are you going to make the connection? So Apple, their brands, but what are you getting from them? You might not be a consumer, but in this case, you're an investor. So for an investor, usually, what is in it for me? And because of that, you have variety of options. And now you want the options that are aligned to your goals. So that's why when you talk about screening, it's just like I normally like using practical examples. So a good example is if people want to be friends, people want to marry, they do a lot of screening. If you've just landed in Kenya from a foreign country, you'd go to Google and search, right? Why are you searching? Because you want to get the right information. So also when it comes to investing, that is very, very key. So that screening process is important if you want to trade financial instruments, because it will lead you to opportunities where your rate of success is likely to be very, very high. So for shares, we look at them from different options, different views, whereby the first is we have individual stocks, sometimes known as shares or equities. So again, just for your information, in the financial markets, there are certain things that the same thing can have as much as 5 names. So shares, they mean the same as stocks, equities. So that is 3 names that mean the same thing. So when you look at them, what you need to know is that you're just making a connection with the way the world works. So the way the world works is basically demand and supply. So that even someone who you'd feel like they have everything they need in life, like let's say a president of the United States of Kenya, or the United States of America, or president of Kenya, they still need a driver, they still need a cook. So that is demand, right? Someone else is gonna supply that. So everyone needs something in this world, irrespective of all that you have. Because of that, now we have what is known as commerce, which traditionally was being done using barter trade. But now we have financial markets. So financial markets is where we have currencies. So you do something, then you get value back into it. So basically, the value that you get, you have it in form of currency, and that has led to the growth of commerce. So that commerce is basically what listed companies are all about. It is not that something else. It's not about being featured anywhere. It's not about being loved by people. At the end of the day, is that there's demand. There's a need that people have. During lockdown, people are at home. They want to get entertained. So they purchase some Netflix subscription, right? If you need some lunch, then you order some lunch from some pizza from Domino Pizza, listed in the US stock market, but is actually operating here in Kenya. Yeah. Then if you've ever been to Nairobi CBD at International Lighthouse, you'll see that there's a logo there for FedEx. FedEx is an e-commerce logistics company. So when you're talking about e-commerce, the loudest is Amazon. But let me tell you, there's a value chain right there. So you should always ask yourself, if I were to order something from the United States of America, how would it reach me? First, you'll go to Amazon, the site, right? And you'll make payments. So when you make payments, there's Visa, there's MasterCard there. So basically, if you look at things, you look at demand and supply, and that's how things move in the world. So it's very, very important that, first of all, once you make that connection, then you'll see how things are moving in the world. So all these things that people are excited about, in some way, they're going to spend money in them. And that is how you have cycles whereby there's a certain point in time in life where some companies are growing. Let's say Safaricom, Equity, Amazon, Microsoft. So as traders and investors, we're basically tagging along where there are opportunities, because you want to be in a position where you're likely to be successful. So that is very, very important, that you have a pattern, something that is logical, that makes sense. It's not about being a genius. It's about having something that can back up with information and data. So that when we say that Amazon is growing, it will be because I think that many people prefer buying things online. It is about payments because we have transitioned to cashless. And even within your family, within the people that you have, you can actually talk to them and find that M-Pesa is a reality. It's not a myth such that Robert is a genius. He's found some opportunity in M-Pesa that other people can't see. So usually, I think if in a trading community, you'll have such mentalities whereby they're geniuses. Let me tell you, it is not about being a genius. It should be something that can make a connection. So if I tell you about e-commerce, for example, we are looking at even the penetration as we speak, it is less than 25%. So that means that the upside is very huge because if you look at the population of the world, there are some countries that have older people, but you have younger people who are growing with technology. That is all that they know. They didn't play with the toys that some generations played with. With them, maybe they started with computer games. So these people are going to be very digital savvy. So it means that the upside potential is huge. So that's what we call total addressable market. And sometimes people miss it. That's how people miss the biggest opportunity. Because if you look at Kenya, cashless transactions, for example, we are only at 4%. So it means the upside is huge. For that reason, the M-Pesa will always grow. So as an investor or a trader, those are the kind of information that you need to look at. And when you look at Kenya, for example, the median age is 19 to 20. So these are young people. Just imagine by the time they get 35 years old for 20, and all they've been using is M-Pesa. It means that there's a time it will be even more common and more acceptable, even for all kinds of trades. Our personal experience during the peak of COVID pandemic, where I usually get my Saturday nation, we had insisted that you never have a till or a paybill number. And during that time, we had an M-Pesa till. So what is happening is that this person is unlikely to go back to his accepting cash, or he's going to at least have a mix of that. Because of that, we are going to see that continued growth. So that is very, very important if you look at the growth of that segment. So when we come to screening, I'll just give you a few examples that we look at. And usually have thematic areas, and it is key for us to learn that the world moves in cycles. If you miss out on that, then you might be like someone who is dancing after the party is over. So you'll be there on a Sunday dancing to yourself, dancing alone in a room, yet the party was on Saturday night. So it's very, very important. When you talk about, let's say, payments or financial services, so there are three layers. There's a time we didn't have commercial banks. And when they came, that was like one of the biggest innovations. So under finance, you need to look at what we call store of value of money. So that is the first thing that we have. So that's about banks, whereby people who have excess, let's say Sylvia has excess money, she put it in a bank account. Then after that, Robert, who is an entrepreneur, founder of Abojani, needs it, the money will be lent to Robert. So that was the biggest innovation. So people liked it when money stays a lot in the bank. It means that the bank will have more to lend to. Then later on, we realized that now I need to travel to the United States of America, I need to travel to China, we need some form of payment. Then in 1950s and 60s is when we had MasterCards and Visa. So you can just imagine, before that, I don't know how people are making payments. It's impossible for us to even imagine. So after that, again, MasterCard and Visa, they came up with this thing that you must have a card to transact. So that we call it velocity of money 1.0. So basically, there's at least a little bit of movement of money. I can swipe my card and make payments. Then you realize, why should I always carry a card with me? And now you have velocity of money 2.0. The likes of PayPal, M-Pesa, just transact when they go, you see. So as you can see, people made money in banks during some point in time. They're still making, but not as fast as they've made with MasterCard and Visa. So if you go to Yahoo Finance, which I want to share, you can see that the growth of Visa and MasterCard has been faster than banks. So just look at Visa. So in the last 5 years, you'll find that they've seen the growth in their business numbers being faster than so you can just see like in the last 5 years. So when you look at, let's say Visa, for example, you can see what has happened in the last 5 years. This is 2021. Then look at MasterCard. Yeah, then if you go to financials, you'll see that they've seen some growth. So 12 billion, 14 billion, 16. So it's basically the demand is growing, but you'll find that they're growing faster than traditional banks like even investment banks like JP Morgan Chase and the rest. Then if you look at the likes of PayPal, they are growing faster than even the likes of MasterCard because they are more innovative. So that's why we are talking about cashless. And look at this. So this 2016 at 37, as we speak at 267. Of course, if you look at the story of Safaricom, people are saying that in 2011 it was trading at 4 Kenya shillings, now it is trading at 40. So you can see the growth is faster than payments companies that still rely on cards. So it goes with the cycles and innovation. So that's an example of screening, because since we rely on commerce and we want to make payments, we'll always be need to make some form of payments. And now we have seen that cashless is still not the number one form of payment. It is cash, but cashless is growing faster than cash. So that's the investment thesis. So under that, you look at companies, and it is about the globe. So another important thing to look at global market is that we have what is known as geopolitics or geographical regions. So you'll find some regions like Latin America. So this company is known as Tronco, is in Brazil. So you'll find that Latin America is a region that is slightly behind even Kenya when it comes to banking and payments. Yeah. So you see opportunities come in. So that is Latin America. So we looked at the US paper. Then in Asia, Southeast Asia to be precise, there's another company. So it is a gaming company, an e-commerce, and a payment company. It is known as C Limited. So usually, what you should tell yourself, you need humility to look at things from a global point of view. So if you think that Safaricom is all that you have in this world, then you might be surprised that there are so many Safaricoms outside there. That's how you look at opportunities from a global point of view. You should know that you are living in your generation, not your country. So when you live in your generation, you're able to see opportunities from a global point of view. So you say, think global, act local, right? Yeah, so that's why scope is here for us to tap into these opportunities. So you can see this C Limited is actually seen in Southeast Asia. So this company started as a gaming company. They said that there's the opportunity in e-commerce, then they went to payments. Yeah, so you can see, you've seen there's Latin America, and still in Latin America, when you look at e-commerce, there's a company known as Mercado Libre. So the less that you'll hear about Amazon, I know they're doing well, but let me tell you, the world doesn't work like that you can have a Safaricom that dominates the world. No, they'll always have a region of influence. So people in Latin America, you can see how well this company has done. It is like the Amazon equivalent of that region. If you go to China again, you'll find the likes of JD.com and Alibaba. So you see, once you open your eyes, and if you believe and think that e-commerce is going to be important, always ask yourself, who is the e-commerce leader in Russia, South Korea, China, Japan? That's how you start now screening opportunities, and you'll be surprised that for every great equity that you have in Kenya, there's another equity bank that is great somewhere else. That's how the world works. And there's enough room at the top. If it were not that way, then maybe we just have companies existing forever, the IBMs. But always, there are new companies that come in and provide opportunities investors. So in South Korea, for example, there's an e-commerce company that isn't listed, very new. So you can see, very new. I think it's less than 2 months old, if I'm not wrong. So very new, quite strategic. Yeah. So that's how you screen. So you screen using thematic areas. Then there are always those new things that are coming up. So you might hear things like apart from payments, now you have e-commerce. So e-commerce, you have Amazon because they are the first innovator. And we all know its story, how great it is. So here we go. So under e-commerce, there are so many companies again. So they're usually different things. So under e-commerce, we have platforms. We have like the likes of Amazon, JD.com, and Coupang from South Korea. They're a unique e-commerce company because they handle everything on an end-to-end basis. They handle even their logistics. But some like Alibaba, they outsource those to third parties. So you can see that even within e-commerce, and do segmentations. Yeah, so that's how now you look at whole thematic area, then you see whether there are subsections. So now again, the Amazon, the way they operate, not everyone like, because they'll just say that, Robert, you have these goods, but for you to sell on our platform, we take 5%. So because of that, again, because of that difference in thinking, like philosophical differences, we now have a company known as Shopify. So Shopify will say this, Robert, I don't want to tell you how to run your business. Just come and create a shop in my platform and do whatever you want. You know, some people like their freedom. They don't want them other telling them. So because of that, we have Shopify still in e-commerce, but see that is a different model. Yeah, so you can see again. So that's why once you look at a thematic area, always look at the what are the niche plays within that sector. Yeah, so you can see. Then still under e-commerce, if you want to look at Shopify as a niche player in e-commerce, you also have other small players. So like there's Etsy. So Etsy is for these people. Usually in Kenya, you complain that people are not buying things from artists and things like that. So let me tell you that for every problem that you have in Kenya, either you'll find a solution or someone will find it in a different place in the world. So if you're a creative, like an artist, you like making your own things, like my churches, they call them Ankara. Yeah, so those ones you can sell on this side, and it has gotten very popular. So you see, just because Amazon cannot solve all problems, you have other people solving those other problems.
Yeah, so maybe you can tell us as the presentation is going on, how you classify the difference between risky and safe shares to invest in when you're doing your analysis.
Yes, so basically what we look at, because in my portfolio, I look at, when I look at shares, I look at it from the sectors that you have, right? So sectorial diversification is very key. That's when we talk about, let's say, e-commerce, there's payment, and also like boring companies. They might not be the hottest, but they're in segments that are still seeing a lot of demand. So like when you look at leisure entertainment, you have like beer companies, gaming companies. See, you see the way they're doing. This is Boston Beverage, for example. So I look at the sectors, then after looking at the sectors, within that I look at market capitalization. So I have large cap, mid cap, and small cap. So the reason why I'm trying to diversify my portfolio, and from each segment that I'm looking at, I'm trying to select the best is to increase my chances of success. Because we are not throwing darts at a board. Yeah, we are trying to be successful. So again, we look at ETFs. So ETFs basically is saying that maybe there's a sector like cybersecurity, right? So I'd say that there are so many companies there, and maybe it is not still a mature sector, but I believe that it will grow, right? Because of that, I'm going to take the basket of shares instead of just taking one company, because it is a wild card, things will go wrong. But see, if I look at the ETFs, which is for cybersecurity, I've gotten one, and I'll just tag along and play in that sector. Yeah. So sometimes even for payments, I've talked about PayPal, Square, and you're not comfortable with them, then you can just come and do the ETF in that sector. So that's to look at share. Then we talked about geographical diversification. Let me tell you, Google is big, but it is not everywhere. Okay. So because of that, you have a company. You know, Russia, if you read about politics, the one there's geopolitics. So there's no way they'll never take things from the US. Because of that, I have Yandex. So I first look at sectorial diversification. Then I'll also protect the downside by ensuring that for some sectors I just do ETF. They move slowly, but in a thematic area, they move consistently. Then I'll also do geographical diversification. So if I were to have a portfolio of 12 companies, I'll do 4 large caps, 3 mid caps, 3 small caps. So that is 10. Then I'll do 2 ETFs. So that's a portfolio of 12 shares. Then within those 10 shares, not the 2 ETFs, within the 10 shares, I'll ensure that I have at least 6 sectors and at least 2 geographical regions. So that's why, for example, we go for Stonco and Yandex to ensure that I have an exposure of the Russian economy and even Brazil or Southeast Asia, Latin America or Southeast Asia. Yeah, so that is for shares. Then for CFDs, for us as Abojani, usually when you look at how we operate from a point of view of we are more buy and hold. But if you are to trade in the short term, that will now take advantage of CFDs. So I'll tell you like a recent trade that we did. So let me share another screen, please. Just a minute. So you can see the kind of trading that we do is once in a while. And my background is also in data science. So I like doing use of data. So then he's saying that the sound is low. Yeah. So this is Alphabet and Facebook. So what happens is that Alphabet released the results ahead of Facebook. Yeah. So because of that, we're able to do regression analysis. So we're able to do regression analysis. So if you look at this, the kind of analysis that we do here, you'd have, I believe we all have at some point in life in this formula, MX plus C. So what happens is that with these two numbers, C from 2016 to 2020, for both companies, you can try to find a correlation. It will not always work. But if the correlation is very strong, like 99%, it means that if this company announces, you can use this number to get this. So that is what we did with Facebook, a trade for Facebook. So when you do this, you can do it in Excel and you'll get these two numbers are very important. And this what they call R square is what shows us there's a correlation. So if it is, let's say 0.5, I won't waste my time there. So because of that, we're able to use this formula, y is equal to mx plus c. So m and c, we get them from this. This is m, this is c. So when we did that, we were able to get $25.8 billion as the projected revenue for Facebook. But analysts had looked at it and they were estimating 23. So from our analysis, this is science, it's not guesswork. So we saw that they beat analyst estimate. So that's why we placed the trade on Facebook. So we do it once in a while based on actual information. And you know that it might not exactly happen that way, but since you've done it consistently for the last 5 years, it has got high chances of success. So when we saw this, we saw that we beat analyst estimates and the numbers came in at 26.17, which was about 1% of what we got. So you can see it was 99% accuracy. So that's why we went for that. So our trades are, we are more into data and quantitative analysis, and it's not like we do it often. So because of that, place that trade for Facebook, which is another company that we believe that the market has not been valuing it correctly. If we look at the Nasdaq index and Facebook, in the last 5 years, the Nasdaq index has gained more than Facebook, but that won't happen forever. So from a fundamental point of view, we've been buying Facebook, and we can see it keep on surprising even analysts. So people say it is a bad company, things like that, but when it comes, you find the so-called analysts are off. So that's an opportunity for you as an investor. So traditionally we do long, but if there's a short-term opportunity, you can do CFDs, but CFD is not our area of strength. We are more buy and hold. Then once in a while, we can do this fuel of the exposure, where we put in something little, but with a conviction based on quantitative analysis. So I hope I've answered you, Sylvia.
Oh, sorry about that. I was asking, in your opinion, when someone is identifying a company to invest in, especially for you as a buy and hold investor, what gives a company an edge?
Okay, thank you. That's a great question. So what gives a company an edge? According to us, so our analysis framework is business analysis, financial analysis, then valuation. So we have a checklist. Like now, if you tell me to go and buy shares of Mumia Sugar, I'll just tell you, I'll give you an assignment and tell you, please go to the top supermarkets in Kenya, then take for me a photo of the shelves where you have sugar. If there's Mumia Sugar there, we can come and talk. And if it is not there, then maybe you need to convince me why I should buy shares. So business analysis, we look at two frameworks. So there's the soft side like leadership, visionary leadership, right? Then there's the hard side whereby we have market and sector information. So like recently there's a research that was done in the US and it shows that Facebook has 24 market share in digital adverts, then Google 28.8. So you see that's something that's backing up my thesis and to do analysis. So I'm not just looking up and doing guesswork, or because my relative works there, I think that I should invest in those shares. So that's business analysis. But after all is said and done, these entities are businesses. So I have to come here and look at the financial analysis. So you can see Facebook in 2017, 40 billion revenue, 55, 70, 85 in 2020. And in quarter one alone, they've done 26 billion, right? So that would hopefully be over 100 billion at the end of the year. So there's growth there, right? So based on that, I'd be comfortable now doing a deep dive into that company. And of course, we look at competitor analysis and things like that. How much they're spending in terms of capital expenditures.
All right. Thank you for that. I think now we can take questions from my co-host.
Yeah, definitely. Thank you for that thorough presentation, Robert, and explanation. So the questions that are coming in, especially from some of our members of the audience who are first-time attendees, and they would, Anne would like to know, being a first-time attendee, what will you say a trading style is? Is it from the perspective of investment or from the perspective of speculation? What will she look out for in order to consider whether she can be passive or active when it comes to investing in the market?
Thank you very much. So like I said, it depends on, if you look at your unique situation. Like for example, for us in Abojani, usually our target market is entrepreneurs and salaried people. Because we assume that they usually work at between 8 and 5 p.m. So most of them, they're too busy to trade. But if you find that you have time to do trading and you can set some time, then you go for trading. But if you find that you are too busy to do that, then you can go passive. Yeah, so that's what you look at. And also, I would say that you need to spend time in learning first, then realize which one can work for you. Because no one can come and impose something for you.
Okay.
So I think that's really important. So look at what can work for you and then you tag along. Because if you work with what works for me or Sylvia, and it doesn't fit into you, then your chances of success will also be very low.
Indeed. And Chelule had you mentioning cycles, and he basically wants to know, is it important to consider business cycles when it comes to selecting stocks to invest in? And if you can be kind enough to elaborate what these particular cycles are to the other members of the audience who don't know what cycles are, in terms of a business cycle or economic cycle, and what edge they can give an investor.
Thank you very much. So when you look at I want to talk about the short cycles, but I'll talk about the mega trends. Yeah. So the mega trends, basically, they're things that they don't happen just for 1 or 2 days. They transcend even decades. So when you talk about M-Pesa, it was innovated in the year 2007, right? And we still have it. It's just yesterday, because the growth is still in double digits. Then when you look at things like technology, so we are here telling you that Microsoft grew by 19% in Q1 of 2021. But do you know when Microsoft was established? In 1975. So that is a mega trend, right? Because it transcends decade. It is something new that is going to grow, because the upside is so huge that it is going to transcend decades. So that's how you look at it. So when you look at nation media here in Kenya, you are not buying newspapers. That mega trend of traditional newspapers is just on its deathbed. It is being taken over by digital newspapers and, let's say, subscription newsletters. So you have like New York Times, which is big in digital. So usually say that if you hate nation media, then what do you want in a typical media company? If you can find it in another company, buy that company. But you can't just say that you love nation media and you are going to die in this. You're going to lose money. So that's how you look at trends and mega trends at a global stage.
Yeah, okay, indeed. So Emmanuel Abeka says he's basically a young person who is interested in the investment sector. And he's asking, what is the vital information does one need to have in order to kickstart the investment journey? I believe part of this was addressed, but if you can be able to recapitulate again and basically guide Becca here, given that he's a young person. And on top of that, I would add, for someone who is a young person, is it important to focus, to also know, to understand the kind of income that they make and what kind of style that will be much more adaptable to them? Will that depend on the time horizon that they have, or the purpose that they want to, invest their money? What purpose do they want the investment to serve them? Is it for retirement? Is it for savings? In that line.
Yes. So I'd say that younger people, they have the luxury of being able to take slightly more risk. So they can try out things, but use little capital for that. So you only add capital if something is working for you. So first start from a learning point of view.
So capital important.
Yes, and where you are headed and the time that you have, the time horizon.
Okay. Okay, there's one final question here from Annette. She is wondering what trends are important to consider as the world emerges out of COVID-19.
So I would say that there will be recovery like in the travel sector. So look at companies like Booking.com, Disney, TripAdvisor and the likes, as well as airline industry.
So I'm trying to see whether there is another. Yeah, and finally, Stella wants to know what are the kind of realistic returns that she would expect if she trades active shares, for instance. Shares which trade actively. Yes.
Usually it's 15% per annum. But it depends. You have to try out and see what will work for you in the long run. But we should at least try to beat inflation, which is 6% in Kenya. So if you can get 10% and above, that is enough. Then you grow with time as you become better.
Okay. So with that, there is no any other questions, but guys, I would encourage you to send more questions via email. if you can, so that you can be able to forward them to Robert. Oh, and finally, before I even say there is no further question. Now, Kennedy is interested in the Nairobi Securities Exchange, and he wants to know which platform can use to analyze stocks in the Nairobi Securities Exchange.
Yeah, I would say that in Kenya, we don't have a lot of such platforms like the US. So what we do is that just look at the sites like CMA website, NSE, and individual company websites. So if you want KCB, you go to their investor relations page, and you'll be able to find their financials and do your analysis. So we don't have those sites in Kenya.
So finally, just a comment from David Mwagindua. It basically says the great thing about stocks is that one can choose to focus on a company within a sector or an industry that they understand, or a company that deals with a product that he or she uses on a daily basis. So besides from drinking Coca-Cola, I guess you can own the share. So yeah, that's basically the last thing I have to mention, and it's quite interesting. So thank you, Robert.
Okay, before we conclude, Robert, maybe you can unshare your screen so we can see you. Jasper was asking, from your own experience, what was your worst investment mistake and what did you learn from it?
Yeah, so thank you for that. So what happened is that here in Kenya, we thought that real estate was going to grow. So I invested in Home Africa and lost 50,000. I bought at 6 and sold at 4. So I've learned it is a very raw lesson. So someone can sing real estate, this invested that to me. But I have the facts, yeah. So I'll always be careful. So I think it's good to learn and understand sectors first. When putting your money.
All right, and so maybe you can tell us if people wish to reach out to you, maybe you can mention your website, any active social media handle for Abojani, as well as any book recommendations on getting started on investing.
Yeah, so I would say that I would go for Psychology of Money by Morgan Housel, just to build in the right psychology. Then for reaching us on Twitter, we are called the Abojani. On Facebook, Abojani Investments. Then our website is www.abojani.com. So I'll just say that focus on learning and education, because education is what has brought all the great things that we have in this world. So people can agree from a philosophical point of view, but if you look at facts, a good example is if you look at Facebook, Microsoft, and the rest, the company that innovated the language that was used to build the application, the person who invented the programming language was called Dennis Rishi. He died a poor man, but the language that he created is what created Microsoft, Apple, Facebook, and the rest. So education is always important, and it will give you the perspective, it will give you the psychological strength to try to rely on your trading patterns and analysis. So learn as much as possible, because the market is ruthless. It is volatile, and it can be overwhelming. If you're educated, you know that this shares drop maybe Alibaba because of the geopolitical wars, and we think that from a long-term point of view, it will still go. There's no single share that keeps on going up. But if you're not educated, you'll just be buying and selling. So you'll be at the mercy of the volatility of the market. And that is something that we can talk about, but you have to learn it by yourself and come up with your plan, something that can work for you.
Okay. I think I should stop saying this is the last question because they keep on coming. So Faith Goga would like your advice on this. So is there any minimum amount that one can use to start with when it comes to investing?
Thank you very much. So I would just say that 5,000, 10,000 is a good amount to start with.
Yeah. So guys, 10,000 is the appropriate minimum amount to start with, and Scope Markets also allows you to open an account pretty much with $100, which is equivalent $50, in fact. Thank you for the correction, which is equivalent to 5,000. So you can start when you want to start.
All right. Thank you so much, Robert, for your time. And we would love to have you again in the future. We do apologize to our attendees for the background noise that happened during the webinar. We will work on that in the next webinar. So until next time, thank you so much. We will be in touch.
Thank you.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar. Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading. Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.